Hello everyone, thanks for checking out my video. Quick announcement, there will be no video next week as I will be at MoveFair on Saturday and have personal commitment on Sunday. I will be back in the following week. Alright, so last week was a short trading week, but that didn't stop the US stock market from hitting new record highs. Giant chip maker Nvidia rose closer to a 4 trillion valuation and was on track to become the most valuable company ever. The latest rally in the market is likely driven by a surprisingly strong US jobs data, which cheered investors as they struck off the lower chance of an interest rate cut this month. But with the tariff deadline coming up and Trump's big beautiful bill in the pipeline, what does it mean for the US stock market? More record highs or time for a pullback? As always, do stay throughout the video to find out more. The stock market had another strong week, with the S&P 500 and Nasdaq moving further into record and uncharted territory. This came after a better than expected jobs report, which fueled optimism that the US economy remains resilient despite the fast-changing trade policy and geopolitics. The latest jobs report shows that non-farm payrolls rose by 147,000 in June. That's above the forecast of 110,000. The unemployment rate fell to 4.1%, a better result than the 4.3% expected by economists. When the report came out, the market quickly priced out chances of an interest rate cut this month, but that didn't dampen the bullish momentum in the stock market. Meanwhile, investors are also following along the progress on Trump's massive tax and spending bill. And finally, on last Friday, Trump has signed into law this huge package at the White House. The so-called Big Beautiful Bill is set to add more than $3 trillion to the national debt. Some say that the bill could slow economic growth, raise borrowing costs, and crowd out other government spending in the years ahead, while others dispute all these claims. Well, I think everyone has their own point, and given how things are so fluid these days, we can only sit and wait to see what happens next. On the trade deals front, after President Donald Trump announced the US-Vietnam trade agreement last Wednesday, investors were eagerly waiting for more deal announcements as the president's early July deadline on his 90-day tariff pause approaches. And that brings me to the next segment, Market Outlook. Investors will be keeping a close eye on tariff headlines for the upcoming week, as the temporary suspension of tariff is set to expire on 9 July. Negotiators from various major US trading partners are rushing to reach agreements with US President Trump's administration by the deadline to avoid even higher tariffs, as Trump and his team have kept up the pressure in recent days. Trump said that he would start sending letters to countries specifying what tariff rates they would face on exports to the US. This is a shift from the earlier proposal of striking individual deals before the 9 July deadline. So right now, investors are just waiting for 9th of July. If that Wednesday deadline passes without an increase in trade tensions, it could prove positive for the markets. But if you have not been updated, while the administration has teased a potential deal with India, talks with Japan, the 6th largest US trading partner and closest ally in Asia, appeared to hit roadblocks. Same can be said for South Korea. Well, let's see what Trump has in store from now till 9 July itself. I mean, he could extend the deadlines, or he can adopt a tough stance on countries that haven't reached an agreement with the US. Really, anything can happen. So do keep yourself informed on the developments and watch how the market reacts. Then you go with the market momentum. Alright, moving over to the technical analysis section. Remember last week I mentioned that the market will likely see more record highs? Well, it played out just as expected. Out of the 4 trading days last week, SPY hit a new all-time high on 3 of them. Like I have repeated many times, at uncharted territory, we will see a number of new record highs before a significant pullback. This coming week will be interesting as the tariff deadline draws near. If we see some good news on the trade deals, then these all-time highs will likely not stop for a while. So in terms of the upside, the next resistance level is at around 631. If the market can break above this, it's super bullish in my opinion. On the other hand, if Trump decides not to extend the tariff deadline and we don't have positive developments from the trade negotiations, watch for the previous all-time high as a support level. This level is at around 610. There is a mini support level at 617 though, but in my view, if the market wants to dump due to bad news from the tariff front, this 617 will likely break. The worst case scenario for this week would be to fill that gap between 600 to 603. I think the psychological level 600 will likely hold for this week if we ever get here. Next up, let's have a look at Apple. Wow, finally I have something different to say about Apple. As shared in my last video, the Bollinger Band was getting really tight, and I mentioned that the next move will be huge. And there we have it, Apple was up every single day last week, gaining about 6%, which is equivalent to more than $180 billion in market cap. Alright, so what's next? All I can say is that Apple is now at a pivotal point. It had a peekaboo moment above that top purple line, which is around 214. For the Apple bulls, here's what you want to see. First, you would want to see Apple closing above this 214 level for at least 2 days, and not that brief moment where it went above it during intraday. By closing above this 214 for 2 days or more, that's a good sign for sure. From there, the bulls can expect Apple to retest the purple line anytime. If it retraces to retest the purple line and bounces up, that's pretty bullish. That's when I would expect Apple to almost fill this entire gap, which is between 214 and 220. But here's the but. As you can see, this 214 level has acted as a resistance on 3 other occasions, and it seems like a strong one. So if Apple gets rejected at this level again, or if it briefly goes above it but fails to sustain and falls back down, we can likely expect Apple's price to return to the low 200s, which is in the middle of this current consolidation zone. From there, I wouldn't even be surprised if it continues to drop further towards the bottom purple line, which sits at around 193. Anyway, whatever I've just shared for both bearish and bullish scenarios, it may take this and next week to pan out, so watch the price movement closely, alright? Let's now jump over to Tesla. Tesla's chart looks interesting. Reason being, it is a very volatile stock with huge movements every other day. It can go up fast and come back down fast. As it came down fast, it recovered fast too, which we saw last week. As you can see, Tesla had a gap down and fell more than 5% on 1st July because of Musk's comments on the Big Beautiful Bill again. But before we knew it, it recovered all its losses in the next 2 days. What I'm trying to say is that though we have lots of huge moves every other day, but if you zoom out the chart, Tesla is still trading sideways in this huge consolidation range between 290s and 360s range. That's a huge 70-point range. Therefore, to me, Tesla is going nowhere at the moment. In terms of the bearish thesis, as long as 290s don't break, we are good. Otherwise, Tesla could potentially fall back into the bottom consolidation zone, which is between 214 and 290. That's a 75-point range. It's quite crazy, right? A stock can move within a 75-point range and yet still in a consolidation phase. As for the upside, sorry, give me just 15 seconds. If you would like to support my channel, please consider buying me coffee via the Ko-Fi link below or sign up for a Longbridge account using my referral link. Your support helps to keep this channel going. Okay, for the upside, Tesla needs to break above 367 before we can say it's bullish. As you can see, this 367 level has acted as a resistance level on previous occasions. So I think we need at least 2 solid green candles above it before we can dream of filling that gap between 394 and 401. Just one more point to note, the 50 and 200 moving averages are pretty near to each other right now, and Tesla has been trading near them recently. So a break away from these 2 levels, whether is it towards the up or downside, it's a signal that that is the new short-term direction which the market makers is heading. Moving on, let's have a look at Google. Well, in my previous video, I shared that once we had a MACD bullish crossover, there is a high probability for Google to hit 180 at least, and it did that last week. Google hit 181 before getting rejected. For the upcoming week, watch this 181 level closely. This level has proven to be a strong resistance level as Google got rejected here on 4 previous occasions. Coincidentally, this is also where the critical 61.8 Fibonacci level sits, which probably explains why Google is having difficulty breaking above it. Okay, but let me tell you, my view is that once Google breaks above this level, or rather, by closing above this level, it will unlock a lot more upside. We could be headed towards the top end of this uptrend channel. Minimally, we should touch the blue line at least, which sits at around 188. From here, a solid close above 188 will almost naturally brings us to the gap area between 192 and 202. On the other hand, if Google continues to struggle at 181 level and wants to pull back, just watch for two things. First is the bottom of the uptrend channel, and second is the 200 moving average. A temporary close below these two levels, it's okay, don't worry. We did that about 2 weeks ago and Google bounced back up. But a prolonged period of trading below the channel and the 200 moving average is definitely bearish in my opinion. Prolonged period in this case is referring to maybe about a week. Alright, let's now move over to Meta. In my last video, I specifically mentioned that if Meta breaks above 735, it's almost certain that Meta will create a new record high by hitting 740. Well, Meta really created another all-time high last Monday and went as high as 745. I hope that could earn a like button from you. Anyway, the share price started to retrace as the week went by, and if the pullback continues this week, don't be too alarmed if it feels that tiny gap between 699 and 702. Within the gap, watch that 700 level as a psychological support. If it doesn't hold, we can expect more downside for the share price. That's when we could see Meta hitting the 680s range, where the first Fibonacci support level is. This particular support level is quite important in the short term. Meta held this level in June when it was tested multiple times, so if it breaks, I think the odds of seeing Meta below 660 are pretty high. In terms of the upside, there's nothing much to analyze. If Meta breaks above the current all-time high, which is around 745, then it's uncharted territory again, which means you don't know when will sellers step in. It could go towards 750 for that matter before pulling back. One last point to add, in the next few weeks, watch for the various Fibonacci support levels on the screen. If Meta starts falling below at least two of them, be very careful of a potential bearish double top. If that plays out, the downside can be really massive. Okay, moving over to Microsoft. Last week was another week where we saw Microsoft hitting yet another all-time high. What's new, right? Anyway, it could not close above the new all-time high, which is a huge psychological level at 500. Let's first talk about the easy one, which is the bullish thesis. If Microsoft starts closing above 500, then you can expect to see a few more all-time highs as FOMO investors will likely start coming in. As to where is the next resistance above 500, I think there's no need to pay too much attention to that because above 500 is uncharted territory. Let's just enjoy the upside, especially if you have bought the shares below 400. You will be sitting on at least 25% profit. As for the downside, honestly, Microsoft can break the first two Fibonacci levels as shown on the screen and it wouldn't bother me at all. These two levels are 483 and 471. But things will get interesting if the 50% Fibonacci level gets breached. This level is 462. Why it's interesting is because 50% Fibonacci level is the so-called pivotal level, which could give you a signal that there could be a change in trend if it breaks. On top of this, the previous all-time high, marked by that purple line, is also sitting near this level. And if this 462 level breaks, the last line of defense lies at around 453, which is formed by the critical 61.8 Fibonacci level and the 50 moving average. We can call this a double support area. Last but not least, Nvidia. Similar to Microsoft, it was another week of new record high for Nvidia, which was expected as per what I have covered in my last video. Other than mentioning we could see a new record high last week, I also shared that if I really have to put a resistance level on top, I would say it's 161. Check this out, Nvidia hit 160.98. I hope that could earn a like button from you. Okay, anyway, for the upcoming week, we can continue to watch this 161 resistance level. Above it, I think the next resistance is at around 168, which we can't really see on screen. And like I have repeated many times, at all-time highs, the so-called uncharted territory, just take all these resistance levels with a pinch of salt. I mean, who can predict at which level and at which point the market decides to dump, right? Alright, for the downside, the first support level to watch is obviously the previous all-time high, which is 153. The bears tried to bring it down last week as this level was tested 2 out of the 4 trading days. And somehow the bulls managed to defend it. So let's see if they can do that again this coming week. If let's say 153 breaks, I think it's almost certain that Nvidia will fill that gap between 147 and 149. In fact, it will likely also fill that second tiny gap between 144 and 145. But all in all, I would say pay attention to the first Fibonacci level at 143. If that breaks, I do believe it will unlock more downside as investors may start to lock in profits. That's when we could see Nvidia back in the 130s range again. If Nvidia ever falls from the current price of 159 to say 139, that's more than 12% drop. Things will get very interesting if it happens in these 2 weeks. Alright, moving over to the options trading segment, just 2 trades to update this week as summarized on the screen. The first trade is this new cash secure put on Google, which was sold last Tuesday 1st July. The strike price is 160 and the contract will expire on 8 August. So why did I sell this contract? Well, on 1st July, I saw that MACD had a bullish crossover, and the bears were unable to push the share price towards the 200 moving average. That's bullish. Prior to this, Google did 2 other bullish moves, which were bouncing off the bottom of the channel and reclaim the 200 moving average. Combining all of this, Google is actually quite bullish in the near term and could potentially grind towards the upper end of the uptrend channel, something that I shared in my previous video. So I was basically sticking to my very own technical analysis as I made this trade. Anyway, since I sold the contract, Google has continued to go higher and my trade is now up by around 36%. Just to add on, including this trade, I have a total of 4 sell puts on Google at the moment. In case you don't know, sell puts is a slightly bullish move, and with 4 sell put contracts, that just shows how bullish I am towards Google's short-term trend. Anyway, as you can see on screen, all 4 contracts are sitting on nice paper profits. Next up is this new cash secure put on Tesla, which was sold on 3rd July Thursday, right before the market closed for the long weekend. The strike price is 235 and the contract will expire on 15 August. Alright, got to be honest with you, there isn't too much technical analysis behind this trade, so I'm not gonna make things up or think of fluffy theories to deceive the viewers. The reason for selling this put contract was purely for side income. But there's a reason why I waited until the end of last week to make the trade. That's because Tesla was scheduled to release its quarterly delivery numbers on Wednesday 2nd July, and no one can predict whether the share price will rise or fall after the report is released. And as it turned out, Tesla reported a significant drop in sales, but yet the stock still popped 5% that day. So when I saw that even poor sales couldn't push the price down, I decided to make my move the next day on 3rd July. But knowing that the tariff deadline is coming up and that Elon Musk might comment on Trump's big beautiful bill again, I decided to pick a strike price that is quite low to give myself some buffer, and that explains the 235 strike price. Because for my strike price to get breached, it needs to fall another 25% and break below multiple strong support levels. I'm not saying it can't happen, but in my view, the odds are not that high. Do you find this sentence familiar? Well, I said the exact same thing in my last video for another Tesla put option. At that point, the trade was red, and it has now turned green. Moving over to the end thought segment. So, after a rollercoaster first half of 2025, the S&P 500 is entering a historically strong period. As shared in my last video, over the past 15 to 20 years, July has been the strongest month for the S&P 500 with an average return of at least 2.5%. But that being said, I thought I should also highlight some of the tests that the market will be facing in the coming weeks. The first one is what I have mentioned earlier, the 90-day tariff pause by Trump ends on 9 July. Assuming Trump stands by his statement that he will not extend this trade deadline, it seems likely that there will not be many trade agreements from now till the deadline. And given the market is trading at all-time highs and is hitting overbought status, and that the fear and greed index is at extreme greed, the market does appear vulnerable to a pullback for the upcoming week. Okay, but I need to clarify, a pullback does not mean a crash or correction, alright? My personal view is that there is a potential case of some negative trade surprises or a sell on the news reaction from the market. I could be very wrong, because Trump could just flip his words and announce an extension or new trade agreements, so please keep yourself updated on the news. The other tests for this month include economic data such as inflation numbers, new corporate earnings season, as well as the Federal Reserve interest rate outlook. Okay, overall, I must say it has been a roller coaster and amazing ride for the past 2 to 4 months. The S&P 500 has risen about 26% from 8 April, where stocks bottomed following Trump's tariff announcement on 2nd April. Interestingly, much of the rally has been driven by retail investors and corporate share buybacks, as institutional investors have been more reserved. Some said that this is a speculative rally, but others think that the market always climbs on wall of worry. But to me, it doesn't quite matter. If the market plunges from now because it's a speculative rally, I will pick up more shares. But if the market keeps going up from here, I'm okay with it because my portfolio is currently sitting at all-time high, just like the market. Last of all, I want to end this video by saying that the market tends to amplify optimism and fears. Market momentum tends to feed on itself, especially in extreme cases. For instance, when markets are at fresh record highs, there will be performance chasing by retail investors and institutions because they cannot be seen as lagging behind. In addition to that, you will also see FOMO investors stepping in because everyone's talking about the stock market, about how much gains their portfolio are sitting on, and how their stocks had 2x, 3x or 10x. On the flip side, fear can be overly amplified too. When there is a huge sell-off in the market, algorithm trading can trigger additional waves of selling, while nervous investors may rush to offload their stocks, further intensifying the downward pressure. Okay, the key message here is maintain your composure and follow your investment strategy rather than blindly following the herd. During periods of market highs like now, it's important to remain level-headed and avoid becoming complacent. Likewise, when the market starts to correct or crash, don't get dragged into the pessimism too. Sound investment decisions come from disciplined thinking and planning, not emotional reactions. Okay, that's all for this video. Don't forget to like the button before you exit, alright? I will see you in the following week. Thank you.